All right, so get that we're doing taxes today.
Ooh, fun.
Yeah, well, we're going to make it fun. We're looking at how kids can actually impact your tax return, like how having children can change things up.
It can be pretty surprising for people.
Yeah, for sure. We found this YouTube video, and it's got all these deductions that I bet most people don't even know about. It's called Claiming Children on a Tax Return, and it's from a channel called TaxAssurances. And let me tell you, it is packed with good stuff.
It really is. I think it highlights how the tax system tries to help families, with the costs of raising kids. And there's so many people who are missing out on these benefits just because they don't know about them.
Yeah, totally. And I think everyone wants to save money on their taxes, right?
Right.
The video mentions a bunch of things, like higher standard deductions and the child tax credit and the earned income tax credit. And then there were deductions for childcare and tuition and even student loan interest.
It really runs the gamut.
Yeah, it's a lot. But one of the things that really stood out to me was the earned income tax credit. That seems like it could be really helpful for a lot of families,
Yeah.
especially for those who are, working hard but maybe still struggling to make ends meet.
Definitely. The Earned Income Tax Credit, or the EITC for short, is a really powerful tool. It's specifically designed for low to moderate income families and individuals, and it can make a huge difference. Like, let's say you're a single parent with 2 kids and you're earning around $30,000 a year. The EITC could give you back an extra $6,000.
Whoa, $6,000. That's not nothing.
No, it's not. That's a serious chunk of change.
Yeah, that could be a whole vacation or something. It's awesome that something like that even exists. Is it really that easy to get, though?
Well, the idea is to make it straightforward, but there are definitely some details to be aware of. Things like your income and filing status and how old your kids are can all play a role in how much you get back. Like if a married couple had that same income as that single parent we were talking about, they might qualify for a different amount.
Oh, interesting.
Yeah, so it's not a one-size-fits-all kind of thing.
So you're saying it's definitely worth doing some research, like checking out the IRS guidelines to see what you might qualify for.
Absolutely. It's worth taking the time to understand how it all works.
Yeah, for sure. Especially when you could be leaving $6,000 on the table. Okay, so the EITC is definitely something to look into. But the video also talks about the child tax credit,
Mm-hmm.
and they make it sound like it's super easy to claim.
It is pretty straightforward. Yeah, it's one of the more user-friendly credits out there.
So what's the deal with that one?
So basically, the child tax credit can directly reduce your tax bill dollar for dollar, up to a certain limit, of course. It's like a straight-up discount on what you owe.
Oh, that's nice.
Yeah, and it's really easy to claim. You just need your child's name and their social security number and date of birth. That's pretty much it.
So just basic information that you should have on hand anyway.
Exactly.
That doesn't sound too bad at all. But wait a minute. I think I've heard that there are income limits for the child tax credit, too.
You're right, there are. For higher earners, the full amount of the credit starts to phase out. So in 2023, that phase out begins at $400,000 for married couples filing jointly. And for single filers, it starts at $200,000.
Oh, okay, so it's not unlimited.
No, but here's the thing. Even if your income is above those limits, you might still be eligible for a portion of the credit. It doesn't just disappear completely.
Oh, so you could still get something back.
Right. And get this. Sometimes you might even qualify for part of the credit even if you don't owe any taxes.
Wait, what? You're telling me that even if I don't owe any taxes, I can still get money back?
You got it.
How is that even possible?
It's because it's what's called a refundable tax credit. That means that if the credit is more than what you owe in taxes, you can actually get the difference back as a refund.
Wow. So it's like a bonus check from the government.
Exactly.
That's amazing. Okay, so we've got the EITC and the child tax credit, both of which sound like they could put some serious money back in your pocket. Even if you don't think you owe any taxes, it sounds like it's worth looking into both of these.
Definitely.
You never know, you might end up with a nice refund. This is starting to feel less like a tax burden and more like a treasure hunt.
I like that analogy.
Yeah, it's like we're uncovering all these hidden gems in the tax code.
Yeah.
Okay, so we've tackled the EITC and the child tax credit. But let's be real, the costs don't stop when those little ones are out of diapers.
That's for sure.
Childcare is a whole other monster. And then there's college looming on the horizon. This video mentions deductions for both of those things too.
It does.
So tell me more.
Well, when it comes to childcare, there's the Child and Dependent Care Credit. It allows you to deduct a portion of your childcare expenses.
So it's not a dollar-for-dollar deduction.
Right. It's not a complete write-off, but it can still make a big difference in your tax bill.
I bet that's a relief for a lot of parents out there. I mean, childcare costs can be astronomical these days.
Oh, absolutely. It's meant to acknowledge that reality and offer some help.
Yeah. It's nice to know that the government recognizes how expensive it is to raise kids. So how much can you actually deduct for childcare?
Well, it depends on your income and how much you're spending on care. So it's worth digging into the details to see how it applies to your situation.
Okay, so there's some help for childcare costs. But what about college? Tuition alone is crazy expensive.
It is.
What kind of deductions are we talking about there?
Well, the video highlights two main tax breaks for higher education. There's the tuition deduction and the student loan interest deduction.
Okay, so break those down for me. What exactly can you deduct with the tuition deduction?
With the tuition deduction, you can deduct a certain amount of qualified education expenses. This includes things like tuition and fees. So it's a nice way to potentially offset some of those costs.
That's great, especially with how much college costs these days. And what about the student loan interest deduction?
So with that one, you can deduct a portion of the interest you paid on your student loans during the year. So if you're dealing with student loan debt, this can help lighten the burden a little.
That's awesome. It seems like every little bit helps, right?
For sure. But keep in mind, these college-related deductions come with their own set of rules and limitations, just like the other deductions we talked about.
Ah, yes, the fine print.
Exactly.
So it's important to understand the details to make sure you're eligible and that you're getting the most out of these benefits. So while we've uncovered some pretty amazing potential savings here, it sounds like we need to approach all of this carefully.
I would agree with that.
We need to do our homework and make sure we understand all the rules,
Definitely.
and maybe even talk to a professional to get some guidance.
A tax professional can be a huge help. They can help you navigate all the ins and outs of the tax code and make sure you're not missing out on anything.
That's probably a good idea.
Yeah.
So what we've learned so far is that there are a ton of potential tax benefits out there for parents. But it's not just about blindly claiming everything you see.
Right. You need to be informed.
Yeah, we need to understand the rules and maybe even get some expert advice along the way.
Exactly. It's about being smart and strategic with your taxes.
Awesome. This is incredible. It's like we found this secret code for navigating the tax world.
I like that.
Yeah, we've already uncovered some potential life-changing savings, but I have a feeling there's even more to explore.
Oh, there's definitely more where that came from. It's amazing how much stuff is hidden in the tax code when you really start looking.
Yeah, it's like a whole secret world. I feel like I need to call my accountant after this just to make sure I'm not missing anything.
Yeah.
What are some of the things that maybe aren't so obvious? Like stuff that the video didn't really spell out?
Well, let's go back to the earned income tax credit for a minute. We talked about how great it is, but those eligibility requirements can get a little tricky. It's not just about how much money you make. Your filing status matters a lot too. Like, let's say you have two families, both making around $40,000 a year, both with two kids. One is a single parent, and the other is a married couple filing jointly. The single parent might actually get a way bigger EITC than the married couple just because of their filing status.
So even if they're earning the same amount of money, they could get different benefits?
Exactly.
That's interesting.
It makes sense when you think about it. You know, different families have different financial situations.
Right. So it's not as simple as just looking at your income.
Nope. And it's not just filing status either. How old your kids are can change things too. The credit amount can be different depending on if you have a baby or a teenager. It's all in the IRS guidelines, but it's worth understanding how these things all work together.
So EITC, definitely worth a closer look to make sure you're maximizing everything.
Agreed.
What about the child tax credit? Any surprises hiding in there? The video made it sound pretty simple.
It is relatively straightforward, especially compared to the EITC. But yeah, like you said, there are always little nuances. We talked about the income limits and how the credit phases out for people who earn more. But here's something else to consider. You might actually be able to get part of the child tax credit even if you don't owe any taxes.
Wait, didn't we just talk about that with the EITC?
Yeah.
So even if you think you're in the clear tax-wise, you could still get money back.
You got it.
So both the EITC and the child tax credit can give you a refund even if you don't owe anything.
Yep. It's kind of like a safety net. It's a way to help families who might be struggling.
That's amazing.
Yeah.
Everyone needs to know about this. It's like free money from the government.
Not exactly free, but it's definitely a great benefit that a lot of people don't even realize is available.
Okay, so we've covered the EITC and the child tax credit, both potentially huge for families. But let's fast forward a bit. Those kids are going to grow up one day.
Yep.
And then we got to think about college. We talked about deductions for college expenses earlier, but let's unpack those a bit more. I'm guessing it's not as easy as just writing off your whole tuition bill, right?
You're right. There are definitely some specifics to keep in mind. Let's start with the tuition deduction. It sounds awesome in theory, but there are limits on how much you can deduct. and not all expenses qualify. You might be able to deduct things like tuition and fees, but stuff like room and board usually doesn't count.
Ah, there it is, the fine print.
Yeah.
So you can't just deduct everything. What about the student loan and interest deduction? Any catches there?
Of course.
Uh-huh.
There are always catches. So with the student loan interest deduction, you can deduct up to a certain amount of the interest you paid during the year, which can be super helpful if you have a lot of student loan debt. But here's the catch. There are income limits. So if you earn above a certain amount, you might not be able to deduct as much, or you might not qualify at all.
This is like a maze.
It can feel that way.
Oh, these twists and turns. How are people supposed to keep track of it all?
The best thing you can do is stay organized and keep really good records of all your expenses. And don't be afraid to ask for help. A tax professional can be like your guide through this whole thing. They can help you make sense of all the rules and maximize your benefits and make sure you don't make any costly mistakes.
It's like having a Sherpa for your taxes. Someone who knows the way. I like it.
Yeah.
So it sounds like professional guidance is really key, especially when it comes to those more complicated deductions. But even beyond those specific things, are there any other general tax tips or strategies that parents should keep in mind, like big picture stuff?
That's a great question. And it brings up a really important point. All these tax benefits we've been talking about, they need to be part of your overall financial plan. They shouldn't be treated as separate things. Your tax situation is going to change as your kids get older. So it's important to think long term and not just focus on what's happening right now.
That makes sense. What worked when your kids were little might not be the best approach when they're teenagers or heading off to college.
Exactly.
So it's not a one and done kind of thing.
Not at all. It's more like a moving target. You need to adapt as things change.
So how can parents prepare for these changes? What can they do now to set themselves up for success later?
Well, first of all, think about how these tax benefits might affect your savings and investment strategies. Like, let's say you're getting a big refund because of the child tax credit. Could you use some of that money to start a college fund for your child?
That's a great idea. It's like turning a tax benefit into a long-term investment.
Right. Or maybe you could contribute to a retirement account. Especially if you're using deductions to lower your taxable income, it's all about being proactive and using these benefits to build a solid financial foundation for your family.
This is mind-blowing. It's like we're not just talking about taxes anymore. We're talking about financial empowerment.
Exactly.
Strategic tax planning can actually help you build long-term security.
Absolutely. It's about understanding how everything is connected and making informed decisions that work for your family. By understanding how your financial choices affect your taxes, you can create a plan that benefits you now and in the future.
This is really eye-opening. I'm starting to see how tax planning can be less about dreading April 15th and more about taking control of your finances.
That's the goal. Knowledge is power. And when it comes to money, that power can give you more security and peace of mind.
We've covered a lot of ground today. We've really gone beyond just listing deductions and dug into how these benefits actually work and how they can affect your overall financial strategy. What would you say is the most important takeaway for our listeners?
I think the biggest thing to remember is this. Don't be intimidated by the tax code. It can seem really complicated, but with a little effort and the right help, you can find a ton of financial opportunities for your family.
I love that. It's about shifting our mindset from fear to empowerment. Taxes aren't just a burden. They can actually be a tool for building a better financial future for ourselves and our families.
That's a great way to put it.
Okay, so we've been talking about all these amazing tax benefits for parents, and it's been really eye-opening to see how much is out there. But you mentioned earlier that our tax situation isn't always the same. Like, it can change as our families grow and our lives change.
Right, it's not static.
So what are some of the things that parents should be aware of? Like, what are some of the milestones or life events that could impact their taxes?
Well, one of the big ones is just your kids getting older. As they hit certain ages, they might not qualify for certain credits or deductions anymore, like we were talking about the child tax credit earlier. That has age limits.
Right. So as your kids get older, you might need to adjust your withholding or how much you're paying in estimated taxes to make up for those changes.
Exactly. It's all about staying on top of those changes and making sure you're prepared.
Yeah, you don't want to get caught off guard.
And then there are those big life events that can really shake things up, like divorce or if a spouse passes away. Those situations can have a huge impact on your filing status and what benefits you're eligible for.
Yeah, those are definitely major life changes. And I imagine sending your kids off to college can also change things up tax-wise.
You're right. Those college-related tax benefits are great. But they can start to phase out as your kid starts earning more money or once they graduate.
So it's not like you can claim those benefits forever.
Nope. It's kind of a sliding scale. The more your child earns, the less you might be able to deduct.
It seems like there are a lot of moving parts to keep track of. Do you have any advice for parents who might be feeling a little overwhelmed by all these potential changes?
Well, the good news is you don't have to become a tax expert overnight. The key is to stay informed and be proactive. Even if you normally have someone else do your taxes, take some time each year to review your own tax situation. Just get familiar with the basics of these benefits and how they might be affected by changes in your life.
So even if you're not doing your own taxes yourself, it's still important to understand the big picture.
Exactly. The more you know, the more confident you'll feel about making financial decisions for your family.
This has been so helpful. I think what's been so great is how you've helped us rethink our whole approach to taxes. We've gone from dreading them to seeing them as a way to actually improve our financial situation.
I'm glad to hear that.
We've learned so much about all the different tax benefits for parents and how important it is to think about taxes as part of our long-term financial planning.
And remember, this is just the beginning. There's always more to learn when it comes to taxes.
That's true. We encourage everyone listening to keep doing their research and stay updated on any changes to the tax code. And most importantly, talk to a tax professional to get personalized advice.
Absolutely. A good tax expert can be such a valuable resource. They can help you navigate all the complexities and make sure you're taking advantage of every opportunity.
This has been a fantastic deep dive. Thanks so much for sharing your expertise with us.
It's been my pleasure.
And to all our listeners out there, thanks for joining us on this journey. We hope you feel empowered to take control of your taxes. Remember, knowledge is power, and with the right information and guidance, you can create a brighter financial future for your family. Until next time, keep learning, keep exploring, and keep diving deep.